Hey everyone, it's Rod with Pow Group. Welcome back on the Pursuit of Wealth, your home for MJ stocks, crypto assets, and interviews. Today's Tuesday, June 27th. Hope you're doing awesome. And in this video, we're going to be discussing Canopy Growth stock, specifically the ticker CGC. There is a bear flag on watch, so we're going to be discussing the target of that. Mentioned this in one of my previous videos a couple of days ago, but I wanted to dedicate a video because I'm getting a lot of questions about this and also some questions about reverse split and delisting, that type of thing. So we'll discuss all that and more here today. Before we get to it though, make sure to smash the like, help support me in the channel. It doesn't cost you anything. If you're new, you can subscribe. Tick the bell, you'll be notified on any future videos or when I go live. Under 3,000 views now, away from 500,000 on the channel. So first and foremost, thank you so much to the community. I really do appreciate it from the bottom of my heart. Definitely wasn't easy. And again, really do appreciate all of the support along the way. So I did a video on CGC not too long ago, and I talked about, I can't find it exactly here. Let me just do a quick search. If you haven't seen this yet, you can just go to my channel and, like I said, just search for this. But I did a video on their Q4 and fiscal 2023 financial results. If you haven't seen that, getting close to 700 views on that one. And that I went into a deep dive on the results. It was pretty poor. And then I mentioned, I did another video on reverse split inevitable. So I talk about it in that video, but I just wanted to just kind of reiterate here again, because a lot of people are still confused, it seems. So right now, CGC has not received its warning from the NASDAQ. So it still has to be trading under $1 for 30 days. So here was the abysmal results. So they had the lowest revenue since 2019. And they had a huge miss in terms of EPS. They reported negative 0.946 USD, and the estimate was negative 0.153. And then revenue estimate was 71.688 million USD, and it came in at 64.723 million. So as I said, we are under $1 now. So we'll go to the first day that we closed under $1. It was right here on May 25th, 2023. You can see here we were finding a floor at $1, but we finally closed below it here on the 25th of May. So if we take a look at how many trading days that is, it's only 21 trading days. So you need to have 30 days trading days under $1, and then you'll get a NASDAQ warning for the minimum bid price share price rule. So it has to be under $1 USD for 30 consecutive trading days, and then they get a warning, and then they would be granted more than likely 180 days grace period to regain compliance. In order to regain compliance, you need to get the stock price back above $1 for 10 consecutive business days, so trading days. So it's going to be at least another 9 trading days before they even get a warning, and then they'll have 6 months, so 180 days to regain compliance. So it's going to be at least 6-7 months before they even have to reverse split, but I don't think they will personally. Anything's possible. There's been reverse splits throughout all of the LPs, the major licensed producers here in Canada. So I wouldn't be surprised, but I don't think it's the most likely scenario. I think that we'll get enough catalysts, safe banking, rescheduling, descheduling possible by the end of the year from HHS. There's a ton of other catalysts as well. I don't see that happening. I think there'll be enough organic growth in the share price, but again, we can prepare for all scenarios, and hopefully that hits at home for everybody, because I'm getting a lot of questions about that still, even after I made the video. So if it's not clear, let me know in the comments, and I'll try to reach out to each one of you individually and clear it up. But hopefully that puts that to bed. But I did mention in a video from, I think it was maybe even yesterday in the live stream, that CGC is a daily bear flag. So if you take the high to the low, and you take the measured move, and then you move it out to the 0.32 fib, which is our Fibonacci. You just take the fib tool, you go from high to the low, and then you get your 0.32 fib. Anything under 59.14 cents is a potential daily bear flag. And then we didn't get above it. We started the daily bounce having broken the high here at 56.3 cents, and then we get as high as 56.79 cents, very, very weak bounce, and still didn't get over that 0.32 fib. So we didn't negate the daily bear flag, and then in order to confirm the daily bear flag, we needed to lose 50 cents. And then the next day, we did not lose it, but today we did. So today, we confirmed the daily bear flag, and the target is 40 cents USD. So from here, from the low of the day today, we could still see approximately another 14.25% downside from here. And that could be a nice bottom indicator as well. So we're looking for this to potentially be our temporary or our local bottom. And I think this could be a long-term bottom, because 50 cents psychological, and we're dipping below. If we go to WEED on the TSX, we're also well below $1 here on WEED. And like I said, coming up close to that 50 cents psychological. But looking at CGC here on the NASDAQ, like I said, we could still see another leg down. I've been saying this for a while now. There's a ton of bear flags out there. Tilray had one, OGI had one. They were all across the sector. So if there's just a daily bear flag on one name, the odds of it going down and seeing another leg down are higher, because the daily bear flag has a very high chance of playing out. Doesn't mean it always will, but it more than likely means that we're heading down. But then when the rest of the sector has daily bear flags, the more confluence, the more names in the sector that do, the more of a thesis we can form that, okay, it's not just one name, it's multiple names, therefore we have a little bit more conviction that we could see more downside. So that's all technical analysis is probabilities and having an edge. And looking at multiple charts, looking at the broader market, seeing what the broader market is doing, right? Headwinds from the S&P 500. If there's weakness there, obviously that would spill over into the MJ space. And then if there's tons of names in the MJ space showing daily bear flags and bearish continuation patterns, then we put a little bit more weight behind the bear thesis, right? So in this instance, it was very believable to think that we were going to 40 cents, and especially after that abysmal earnings that they came out with that were just atrocious. So again, lots to be desired here. There's probably no clear path to profitability until late 2024 into 2025, maybe at best case. So again, I do think Canopy is going to stand the test of time. Again, I have it in my portfolio. It's only about 5 or 7% of my whole MJ portfolio. But again, not financial advice. This is for entertainment purposes only. Not telling you to buy, sell, or hold. And this is just my own thoughts and opinions. I don't think that CGC is going to, sink. I think they're going to swim long term. I think they're going to be here. They're going to be, if not top 5, top 10 for sure globally. And that's my thoughts and opinions. And again, I've been very bearish on CGC for the last couple of years. And the whole MJ space has been really bearish for the last couple of years, but I was more specifically more bearish on CGC just because I knew that they were getting rid of their retail locations, their Tokyo Smoke, and like they were into retail, and I just thought that was a bad idea. Then they closed all those shops, so it was going to be many quarters before we seen all that trickle down, and that hurt the business and its operations, and huge loss. What was it, 3.3 billion for the year and 647 million or loss or something for the quarter. So it's been a rough ride, and hopefully this is getting close to the end. But we were well below the 10-week moving average. We had a bear cross of the stochastic and the MACD as well. So we were bearish on all of our weekly macro indicators, and we were well below the weekly moving averages as well. We even had a bear cross of the 50 and the 100 weekly moving average, and it's just been a straight bloodbath ever since. And then we almost geared up for a golden cross here back in the beginning of the year in January, February, and it failed. And just like most MJ, all of the golden crosses attempts failed, and we continue to slide from there. And all MJs down 80 to 90% plus from their February 2021 highs and all-time highs. But unfortunately, we are looking for a bit more downside, like I said, from the current low there of today, where we could see another 14.2% ish of downside. But the good news is we're getting very, very close to a bottom. We're extremely oversold here on the daily time frame. We're in the teens. We're at 14.76 on the RSI, and then on the weekly time frame, we're sitting at 23.59, and then if we take a look at the monthly time frame, we're very, very close to monthly oversold, and we've only been this oversold one other time in history, right? So again, if you know nothing about technical analysis, if you tend to sell when we're overbought up here and then buy when we're oversold, that you do better than 99% of investors, right? And that is easier said than done, because when you're here, everybody thinks they're a genius and everybody wants to buy it. The media is pumping it. Your friends and your family love it. Even your dog loving MJ stocks. But down here, no one wants it. So it's hard to be a bull and an enthusiast when nobody wants it, right? But that's when wealth is really made. And you can't have... We want volatility, right? We want these 90%, these 99% pullbacks, so we can load up at ridiculously low prices, so that whenever we do enter another bull market, a multi-year bull market, we'll have exponential wealth and multiplier effect, right? The same thing happened with crypto. Amazon dropped 95%. Apple almost went bankrupt in 1997, dropped 85% after the dot-com boom. You can find it in anything, right? Netflix dropped 80%, almost 80% in 6 months last year. So you can find it in every sector, every industry, and not just one name. It's across multiple names in each industry and sector. So again, this won't be the last time that we drop 90%. This won't be the only sector that drops 90% in the future. And again, just knowing that we can go up, down, or sideways, being prepared for more downside, and being able to dollar cost average, that's my plan. And like I said, I probably won't be investing any more than 10% into Canopy long term, because I think there's better plays out there. But I do think it's a good risk to reward based on the current valuation and the current share price. I think that we could see a massive rally if we do see change at the federal level in the U.S. Even if we get safe banking uplisting in the NYSE and the NASDAQ, that's going to be huge for MSO and US operators, but it's going to create that hype. So it'll definitely help the share price for the Canadian producers as well. And then we could see rescheduling, maybe even descheduling, and legalization of medical into the end of the year here. So in the US. So lots of catalysts to be looking out for, but going into it there, let me know your thoughts and opinions in the comments below. Let me know if that's clear about the reverse split and NASDAQ delisting warning. Hopefully that puts that to bed. But going to end it there, hope you have a great night. It's Rob with Pal Group. Thanks again for joining us in the Pursuit of Wealth, and we'll see you on the next video.